Hey everybody, it's Jack. I hope you're all having an amazing day today. Another week has just passed us by, so you know exactly what that means. It's time for another WealthSimple Small Account Challenge update video. So we just finished week 7 of the challenge, and the past week for the stock market went exactly how I thought it was going to. We saw a lot of stocks start the week in the green, and then by the middle to end of the week, we saw them come back down in price. So we finished the week pretty flat with not a whole lot of change from the week prior, which is exactly what I said in the last video that I thought we might see over the next few weeks, a pretty flat stock market. So with that being said, in this video, I'm going to recap all the moves I made last week. So I'll go over all the stocks I bought and what new stocks I added to my portfolio. And I'll also go over any stocks, if there were, that I sold. And then I'll wrap up the video with my watch list for the week ahead, what stocks I'm looking to add to, or what new stocks I'm trying to add to the portfolio, as well as just my general thoughts for how the stock market will go over the next week. So let's jump right into it and get going with the video. As always, just quickly for anyone who's new to my channel and wondering what it is I'm doing, I'm currently undergoing a WealthSimple Small Account Challenge where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. I save wherever and whenever I can every week and throw that money into this account to buy a few shares of dividend stocks, growth stocks, and ETFs in the hope that one day I can grow this account to the point where I can retire and live off of it. That is the end goal years down the road, but we're slowly chipping away and I'm documenting my process here for you all. So let's jump right in. So as far as my account status goes, my current account balance is $3,100.22. So we broke the $3,000 mark this week, which is pretty exciting. It's a small milestone towards that big goal of 100,000. But hey, every milestone counts and we're slowly working our way there. So just like last week, Friday was the best day of the week for us. Our account was up $69.23 for a percentage of 2.28%. And over the week, we were up $23.74, 0.77%. You know, close to that 1% mark, which is pretty great if you think about being 52 weeks in a year. If you're able to get 1% a week, which I'm not saying I'm going to do, that would be up 52% for the whole year. So that would be pretty sweet if we can keep at this pace. So yeah, another small week in the green, we'll take it. And as far as the positions go in the account, I opened one new position this week in a new ETF that I featured in a video earlier in the week that I'll pop up on screen, where I went over growth ETFs. And I now have 2 of the 3 ETFs that I featured in that video. So the one I added this week is XIT. It's a Canadian technology ETF. So it holds a lot of the big players in the Canadian technology space, such as your Shopify, Constellation Software, OpenText, a bunch of Canada's top tech stocks. So what I like about this ETF, XIT, is that it gives me exposure to a lot of Canadian technology companies that trade at really high share prices. So like your Shopify's, they're over $1,000. So for an account like mine, it doesn't make sense to go out and purchase one Shopify share. So I can get exposure to a lot of different Canadian tech companies like this that trade at high share prices without having to fork up thousands of dollars at a time. So before we dive into my Excel spreadsheet where I go over all the positions I own and how many shares of each stock I hold, and where I track all my passive income from dividends, let's first just quickly list off all of the stocks and ETFs I currently own in my portfolio. Again, this week I didn't sell any stocks. My overall strategy is long-term buy and hold. All the stocks I own are ones that I think will see good growth or pay handsome dividends for years and years to come. So I'm really not selling anytime in the near future. These are all long-term plays that I believe in. So diving into the positions I currently hold within my portfolio, I currently hold 10 stocks and 4 ETFs within my account. They are Algonquin Power and Utilities, AQN, which is a great dividend stock that I also think will grow nicely year over year. Then I have BEPC, Brookfield Renewables, which is a renewable energy company that I featured this week in one of my dividend videos where I go over the best growth dividend stocks. So this one has a 3% dividend, but I also like this for growth as well. And then I have Enbridge, ENB, which pays an over 7% dividend. So this is mostly a nice income and cash flow stock. Then I have Fortis, another utility company, FTS is the ticker. And then we go into my growth stocks. I have GDNP, Good Natured Products, which deals with renewable packaging. And then I have GRN, Greenlane Renewables, a renewable natural gas company. Then I have HEO, H2O Innovations, and Standard Lithium, SLL. These are the 2 stocks that are the main reason for my account being in the green this week. They both had killer weeks and are my two largest positions. So shout out to them. And then we have one of my ETFs, QQC-F, which is the NASDAQ 100 ETF that has seen some crazy growth over the past 5 years and is majority made up of big tech, your Apple, Amazons, Googles, and things like that. So this is a growth ETF. And then I have a few more dividend stocks. I have TELUS, ticker symbol T, which is a telecom company that pays a nice dividend and has been growing its dividend and share price really nicely over the past few years. And then I have Smart Centers Real Estate Investment Trust. This is the only REIT I own. It's SRU. It pays that 7% dividend, and it also pays out its dividend monthly. So again, that's great for cash flow on a month-to-month basis. And then my three other ETF positions that I hold. The first one is VDY, which is a Canadian dividend ETF. So it holds all dividend stocks. And this is where I'm currently getting my exposure to the Canadian banks because VDY is made up 50% of the Canadian banks with respect to its holdings. And then I have VFV, which is a Vanguard S&P 500 ETF. This brings nice stability to any account and should see that 5, 7, 10% growth year over year. And then I have my brand new ETF XIT, which is the Canadian Tech ETF, which I currently own 2 shares of and trades around $46 per share. So those are all my positions. Let's now jump into my Excel spreadsheet where I track my passive income every single week. So here's the simple Excel spreadsheet that I use to track my passive income through my dividends, as well as the breakdown of my portfolio. And as always, you can find the link to this Excel spreadsheet down in the description of this video. You can download it and play around with it and customize it to your own portfolio. If you run into any issues with it, just leave a comment down below and I'll try to help you out. So as far as the stock positions that I added to last week and bought more shares of, like I said in last week's video, my focus was on ETFs for the week. So I added to my QQC-F position, my NASDAQ 100 ETF, I added one more share. So I now have 2 shares, and this is one that I will probably add a share to once a month as I want to get more and more exposure to the US market and especially big tech. And then like I've mentioned, I got my 2 shares of the Canadian Tech ETF, XIT. This is another growth ETF in my portfolio. And then I also added to one of my safer ETFs, VDY, which is that Vanguard Dividend ETF, which is my exposure currently to the Canadian banks as well as other dividend stocks. So I now have 5 shares of VDY for a total of 6.1% of my portfolio. And then a few dividend stocks that I picked up extra shares of. I picked up 2 more shares of AQN. So I now have 16 shares. I picked up 2 shares under $20. That was my goal for the week. I think under $20, this stock is a no-brainer. I brought my average cost down from above $21 to $20.94, and AQN now takes up 10.2% of my portfolio. I also added 2 shares to TELUS, so I now have a total of 11 shares of TELUS. I bought 2 shares under $26, also bringing my average cost down for TELUS. It took a little bit of a dip after the news that Rogers was acquiring Shaw came out. The very next day, TELUS dropped 2% as market opened, so I bought in 2 more shares, bringing my average cost down, and TELUS now takes up 9.3% of my portfolio. Throughout the week, I also sprinkled in 5 or so shares to most of my penny growth stocks, other than HEO. I added 5 shares to Standard Lithium at about $3.18. I then added 15 shares of Good Natured Products. Then I also added 5 shares of Greenlane Renewables. So that was all the buying I did this week. Looking now at my dividend tracking of my annual dividends as well as my monthly average for passive income, we can see that last week I was around $57 for my annual income and $4.78 for my monthly average. And I've now gone up to $62.90 for my annual dividend income, as well as my monthly average is now up to $5.24. So it only went up about $5 for my annual dividend. And this is because I focused primarily last week on buying ETFs, and not all my ETFs offered dividends. I only purchased a few shares of actual dividend stocks, so it didn't go up a whole lot. I'm hoping to see this number go up more over the next week as I focus primarily on dividend stocks. But tracking how your annual income goes up each and every week using this dividend tracking is a great way to get satisfaction from buying dividend stocks, which aren't usually as flashy as penny stocks or other growth stocks. But in the long term, these really help to build a well-rounded portfolio that if you are going to retire off of your investments, you're going to need to have dividends in there. So this is just a great way to build your passive income. And week after week, by continuing to add a few dividend shares a week, this passive income will continue to grow and really snowball in the long run. So jumping now into my portfolio breakdown, where I have the percentages of my portfolio in each stock, I currently still have my largest positions as Standard Lithium and HEO, H2O Innovations, making up 17.4% and 16%. I believe Standard Lithium was around 19% and H2O Innovations was around 17%. So they're now down a couple percent in overall weightings of the portfolio. And you can see that now my ETF positions make up about 20% of my portfolio, which is great. I'm trying to get my ETFs around 20 to 30% of the portfolio. So they're now kind of in that sweet spot. And my long-term goal is still to bring down the weightings of my penny stocks. I want my penny stocks to make up at most 30% of my portfolio. And currently H2O and Standard Lithium alone are making up more than 30%. Adding in GRN and GDNP, we're looking at around 40% currently in my penny stocks. So I still need to bring this down 10% overall. And I'm going to do this by adding more aggressively to my ETF and dividend positions. Primarily in my dividend positions, there's a couple more I want to build up. And over the next few weeks, I'm going to continue to add a few more new dividend positions to my overall portfolio, because currently my dividends take up around 40% of the portfolio in weighting. And I want to get that more to around 50%, 20% in ETFs, and then 30% in growth stock. Looking here in the light blue and light pink, I have my Smart Centers and Enbridge position that make up 3% and 5% of the portfolio. This week's goal is going to be to focus on adding to these positions because they both offer around 7% dividend yield. And this week I want to really focus on increasing my passive income through my dividends. So I'm going to target these two positions primarily. So that leads right into my weekly watch list. Currently on my weekly watch list for growth stocks, I have good natured products. I currently have 75 shares of GDNP. I want to bring that up to an even 100. So my goal is to add 25 shares of GDNP over the next week and hopefully getting it under $1.20 because that's been in the range that it's been trading at the last week. And I think this stock has a lot of room for growth over the next year, especially as we move away from single-use plastics. And then the second growth stock I'm focusing on this week is Greenlane Renewables, GRN. I love this stock, so I want to add another 5 to 10 shares below $2 ideally. There's been some new price targets by analysts come out for Greenlane Renewables, and they have this stock getting to above $3 in the next year. So great upside potential if you can get GRN below $2 per share. And then finally, when it comes to dividends for this week, on my watch list, I have TD Bank. It was on there last week, and I said I wanted to get in around $78, but TD has been doing pretty well, and I don't see it getting to that level over the next little while. I'm going to bite the bullet and start my position in TD this upcoming week. Hopefully I can buy 1 or 2 shares around $81. We saw on Friday that the share price dropped about 1%. If we can get this another day or two, hopefully I can pick up TD at a relatively decent price. And then if it goes down from there, I will continue adding over the next few months. And then, like I said, my last 2 stocks on my watch list for dividends is Enbridge. I want to add 1 or 2, hopefully below 45. Analysts have this stock in the next 12 months being well above $50. $50 is the lowest analyst rating for this stock. So that's a 10% upside right there. If I can get in below $45, I'll be pocketing that 7% dividend while hopefully looking a 10% gain in share price, which is great in my opinion. And then Smart Centers, like I said, that's just a monthly dividend. So I can get monthly cash flow into my account. So I'm just going to look to add 1 of those over the next few weeks. So there you have it. There's my watch list for the week ahead. I'm going to be adding a little bit to a few of my growth stock positions in good natured products and Greenlane Renewables, just a little bit, and pick up a few more shares of each. But I'm going to be focusing the majority of my money this week on dividend stocks, primarily adding a new position to my account in TD. And then secondly, I'll be adding 1 or 2 more shares of Enbridge, which pays an over 7% dividend currently. So that pretty much wraps up the video. Let me know down below in the comments the #1 stock on your watch list for the upcoming week. We are all learning together and it really helps me out as I'm always looking for new stocks to add to the portfolio. So with that being said, I hope you guys enjoyed this video. And as always, like the video and subscribe to the channel if you haven't already. Lots more content coming your way, and I'll see you in the next one.